proud of. And we are happy to hear that Indonesia is leading in this respect. However, the COVID-19 pandemic has created a very difficult challenge, which affected almost everything and everybody. I remember last year we had, it's one of my experience of participating in one of the biggest events was the ISEF event that was 2019 that was organized in November alongside the IFSB Summit. I believe the audience, the participation in that event has indicated that Indonesia has a greater network and agenda for the development of Islamic economy all over the world. Having said that, the frontiers highlighted, I concur with the frontiers highlighted by His Excellency Professor Wimbo in his keynote address delivered by Brother Ahmad. That is I believe the integrated integration and collaboration, digitalization, sustainability, as well as international cooperation as the key frontiers or the next frontiers for the Islamic financial service industry. However, being from the IFSB, that is, we are a standard setting body, and for the benefit of the audience and the participants, the Islamic Financial Services Board, IFSB, is an international standard setting body that is mandated to come up with standards and facilitate the implementation of those standards for the regulation of the Islamic financial services industry, particularly prudential regulation. The IFSB's work complement the work of the Basel Committee of Banking Supervision, the International Association of Securities Organizations, ISCO, as well as the International Association of Insurance Supervisors, IAIS. That is to say, the IFSB look into the three sectors of the Islamic financial services industry globally. The IFSB was established in 2002 and we commenced operation in 2003. And as of today, I'm talking to you, the IFSB has about 187 members from 57 countries that comprise of the 79 regulatory and supervisory authorities and 99 market players and 9 international organizations, including the Islamic Development Bank, the IMF, the World Bank, the United Nations Development Program, the Bank of International Settlements, and many others. They are all members of the IFSB. Having said that, looking at the topic of today, the impact of the COVID-19 as well as the next frontier post-COVID-19, it is important for us to look at what the Islamic financial services industry stands for as at 2019 before the pandemic. The year-on-year growth for the Islamic financial services industry in terms of the global asset has seen a tremendous positive growth year-on-year. We were at 2 trillion in 2017, and we had a 6.9% growth. And in 2018, we are 2.19 trillion, but before the pandemic, we were 2.44 trillion. This is as at Q3 of 2019. This to show that the Islamic financial services industry globally, in terms of total asset, has been growing steadily and maintain it is positive growth over the years. But I mean, one can argue that the Islamic financial services industry globally is still very negligible, very small compared to the conventional services industry. But I believe the resilience that is being demonstrated by the Islamic financial services industry has shown that there is a greater chance of growth, and the growth is sustainable, and it requires the commitment and support of all the stakeholders involved. Now, having said that, the COVID-19 is a unique crisis in the sense that it did not originate from a financial system, as we all know. It is truly a global crisis because almost everything and every country is affected. Policy responses has been very unique. You can find a situation whereby a regulator that is very much concerned about resilience. They found of the financial system, they found themselves in a difficult balancing act, trying to balance between economic sustainability and as well as the health, as well as financial sustainability. So it's quite challenging times. The crisis is likely to continue with some uncertainties, but we believe the policy responses that has been initiated will be able to address the liquidity challenges as well as the solvency and recovery phases of the crisis based on the policies that has been initiated globally. Now, having said that, the standard setters, let me just start with IFSB's perspective in terms of as a standard setting body with regard to our response to COVID-19. And I believe this is very important to understand that we have to complement all the initiatives that is being done by the governments as well as the regulatory and supervisory authorities. So as a standard setting bodies, we have issued guidance to support the national authorities in their effort to provide sound and well-coordinated policy measures to mitigate the impact of the COVID-19 on both financial and economic stability. The guidance was aimed at a number of objectives. First, we want to support the national jurisdictions measures that has been initiated. And at the same time, we also want to encourage the use of embedded flexibility in the global standards that has been issued, as well as the restrictions that has been relaxed, as well as to ensure that the regulators come up with a clear exit strategy with all the initiatives. It will also aim at enhancing transparency and consumer and investor protection. That's one of the major reasons why the standard setting bodies has to respond. We believe that we will be able to provide authorities and other institutions with the additional operational capacity in terms of the technical know-how in response to the effect of the pandemic on the stability and resilience of the financial services industry. Now, the IFSB as an international standard setting body, we have taken quite a number of initiatives ranging from setting up a crisis management committee. We have also, like every other person, established a work from home policy. We use the virtual format for our meetings and so on. We come up with a compendium of policy responses in which we try to look at globally what are the policy responses and what are their likely impact on the global financial services industry. And we believe that by sharing that with all our members, they'll be able to understand what country A has taken in terms of initiatives, and they will be able to learn and benefit from that as a reference toolkit. We have also issued a number of public statements, and then we give support in terms of capacity building for all our members. And we are currently having a dedicated research work on the impact of the pandemic, looking at the data for the first Q1, Q2 of 2020. We believe with the analysis of the data, we'll be able to come up with an assessment of the level of the impact on the global Islamic financial services industry. But that notwithstanding, the impact on the sectors, all the three sectors, requires a unique kind of initiative. So as far as we are concerned, we try to look at the Islamic financial services industry, particularly the banking sector. We look at that the profit-sharing investment account holders are those to be affected. And we believe that there will be some issues with regard to creativity by some institutions with regard to expected credit loss accounting. We also believe that the moratorium that is being issued by the governments and the moratorium payments by many authorities will definitely impact the banking industry. So the IFSB, what we did was basically to come up with some measures, particularly for the banking industry, to say that, okay, you have to look at these areas. As you all know, for example, the profit-sharing investment account holders are those that are using Mudaraba investment contracts, as well as, yes, Mudaraba Islamic finance contract. And then they are not shareholders, and they may even have some deposits which are more than even the shareholders' funds. But by their nature, in the principle of the Mudaraba, this deposit cannot be protected. Because they are not covered in many jurisdictions by the deposit insurance authorities as well. Now, for the Islamic capital market, it also have unique challenges, and the focus that the IFSB was basically to ensure that the Islamic capital market intermediaries are very transparent. They are being monitored closely by the regulators, and we also try to ensure that the investors are well protected, and then there is an enhancement in terms of the disclosure requirement. So this is something that is very essential, and we have already issued public statements for both Islamic capital market and the Islamic banking, and we'll continue to monitor the policy responses as well as the impact of the policies that has been issued, and then we'll be able to continue to guide the industry. With regard to Takaful, we look at two focus areas as well, in addition to the investment, which basically the Takaful holders protections regarding to their contributions and the investment funds, how they are being, going to be protected with the impact of the COVID-19. And then contribution with regard to the departments of contributions as initially being allowed or permitted. Then now we have to look at what are the measures that has been introduced to support this Takaful industry. So as you can see, the IFSB is actually kind of looking at the entire industry, but that does not mean that Islamic social finance or financial inclusion is not included. Financial inclusion is also covered. The utilization of technology, fintech is also being carefully monitored because we believe the technology application will bring a new set of risk for the Islamic financial services industry. So particularly with the banking sector, we'll try to look at the regulatory responses since the global financial crisis. That's look into the implementation of standards issued by Basel Committee and other equivalents of the IFSB standards, and try to see what will be the level of implication of these policies or guidelines that we have issued during the COVID-19 for the banking sector. We also try to look at the regulatory and supervisory authorities' initiatives to encourage banks to support, to live out of this crisis. So we closely monitor that. We believe the flexibility that is being allowed by many regulatory and supervisory authorities to the banks will definitely help them to get out of the crisis. But at the same time, it may have a new impact, which needs to be closely monitored. Islamic banks, we believe they are better capitalized and more liquid than before during the pandemic. All indications from the data that we have gathered so far indicated that the Islamic banks are less affected compared to maybe other sectors of the economy. Nonetheless, asset quality and profitability may be impacted if the COVID-19 crisis is prolonged, particularly with regard to the asset qualities in various investments, instruments, or in the balance sheet of the bank. So this is an area whereby the IFSB is also encouraging the regulators to monitor closely, and we at the Secretary are also currently conducting a survey globally to assess the impact with regard to the asset quality and as well as the profitability of the Islamic banking sector. We believe that the banking system will also be able to absorb the shocks, particularly in jurisdictions whereby sufficient capital buffers have been provided, and in some jurisdictions where they have the profit equalization and reserves as well as the investment risk reserve. That will really help the Islamic banking sector to maybe manage greatly the level of potential impact with regard to their profitability as well as their investment. And then we believe that the banks may have built up strong capital and liquidity buffers, but there may be some, downturns that need to be considered, which is very, very essential for the regulators to monitor. Having said that, the Islamic banks will definitely be careful, need to look more closely with regard to the increasing credit rates because potentially at this time they may not be able to, despite the government and the authority are creating flexibility, a lot of jurisdictions have reduced their interest rates, but the SMEs are not coming forward to borrow. So, and then the non-performing financing that is being issued slightly may be affected due to the fact that majority of the SMEs globally have been affected. Definitely market risks, we can say that is uncertain. It may possibly continue for a short period of time, but with the opening of the economy, we have seen some greater rebounds. But the fact that now we are having a second wave now, this also creates some uncertainty with regard to that. Now, at the same time, we believe that definitely the operational challenges will also create a new risk. The fact that majority of the institutions are working from home. I'm also working from home actually for today. In Malaysia, we had the opportunity to be having very basically close to zero cases, but just of a sudden, now we are having a second wave, and then the government has give us the guidance to ensure that the safety of employees as well as the economy is maintained and observed. So we are effective from today, 22nd, most organizations will be working from home. So we believe this will create another new uncertainty, a new challenge for working from home, because there will be new exposure to technology risk, particularly with regard to cybersecurity risks, as well as people now will be very much exposed to using some networks that are not secured, and that may also create additional challenges. So these are areas that we are looking at it, but all that is not, is not something that we believe cannot be overcome. It will be overcome, and the initiatives by many regulatory and supervisory authorities globally has been very tremendous. We commend, as IFSB, we commend their efforts, and we believe with the even keynote address that is being highlighted, a number of initiatives by Indonesia that is basically similar to what is happening in many jurisdictions. The governments are very concerned. The central banks are well aware of and committed to come up with solutions. So we believe that there may be some opportunities as well post-COVID-19, in addition to whatever that has been highlighted. That's why I mentioned at the beginning that I totally, absolutely concur with the next frontiers that has been itemized by His Excellency Dr. Winbo Santoso in his keynote address as delivered by Brother Ahmad. The integration and collaboration, digitalization, sustainability, and international cooperations are important, but we believe that for the Islamic finance, there will be a number of opportunities. We believe it provides the Sharia compliant solutions for the COVID-19, the opportunity to leverage on the use of Islamic social finance instrument, the Waqaf, Zakat, and Sadaqah. We have seen the effort by Indonesia to come with the Waqaf microbank, and that's really is going to be a game changer, and it will and I think the digital transformation has been accelerated, and we see that this is also an opportunity for many customers that were initially considered as unbankable to now to be bankable, and then the reach out the penetration will be higher, in the sense that many will have the opportunity to now be in the financial services industry by doing some both major and minor transactions, because the reach out will be higher. So the fact that now we are leveraging on digitalization and the technology, we see it as an enabler and as an opportunity. And that's why, I mean, in the report of S&P, as you rightly highlighted, Brother Rizky, that the use of fintech is one of the key drivers for the Islamic financial services industry. But as well, I do agree ESG, but ESG need to be carefully looked into. And then currently we need to have some global standard and guidance with regard to the ESG on how ESG can be leveraged on. Inclusive standards, yes, is part of the international collaboration as well as the cooperation. And I believe that will also give an opportunity for the Islamic finance. The Islamic financial service industry has the opportunity to look at the new concept of digital banking, the new concept of the Islamic social banking, as well as the efficient methodology that is being now used to deploy zakat. I believe last year also it was very interesting and notable to appreciated the effort by Indonesia by coming up with particularly Bank Indonesia, by coming up with the Waqaf core principles. I mean, that was the first core principle that is being issued, and it will be very helpful in this standard was issued by co-principles developed with IRT and Islamic Development Bank, and which is very, very commendable. And the recent initiatives as well by the Islamic Development Bank and all other stakeholders as a global players will really help create another opportunity for Islamic financial services industry, in the sense that the institution in their respective jurisdictions should not be considering that they are alone in this fight or they are alone in this. So, but definitely there will be some challenges ahead which we need to look into. The challenges in terms of how do we transition in this crisis with regard to the illiquidity and particularly with the insolvency phase. So liquidity definitely maybe continue to affect some institutions in different sectors. And then there is also a limited space for maneuvering, in the sense that we have set of global standards and we have experience in the global financial crisis in the past. And even though that this is not a financial crisis, but it's more than a financial crisis. So it affects almost everything. So we need to be very careful in terms of the policy responses that will be coming. So this is also another challenge. We believe there is also an existing financial vulnerabilities excavating the impact of the shock on economic activity, particularly with regard to the way that the SMEs are being affected and the way that some of the conventional financial institutions also will be affected, which definitely the Islamic financial institutions are not immune to that. And then they may be as well in a way being affected by. We believe with the support of the regulators, this can be managed, this particular challenge. Economic outlook is still uncertain because, vaccines in the process of development and some of the vaccines are actually yet to be tested. So we don't know when this crisis will end, and we don't know when it will be over. So we are very much closely watching the development, and we believe that this is also the global economic outlook is really uncertain due to the fact that now we are not even talking about trade wars. Now we are talking about basically how do we secure the health and the well-being of every person globally, and that which affect the economy. And then we believe also the uncertainty about the initiatives and the policies that has been initiated due to the pandemic is also something that we need to ensure that we have a clear strategy, a clear exit strategy from out of these policies, because definitely this is another challenge which we believe may have a greater impact for the global Islamic financial services industry.
Okay.
So,
Dr. Bello, excuse me, 2 more minutes, may I?
All right. Okay.
Thank you very much. Thank you very much. Excellent. Thank you.
All right. Okay. Thank you. So basically, the way forward is basically to look at how we balance for the Islamic financial service industry, particularly the banking, their buffers, and then how do we sustain the economy. Operational resilience is something that we have to look into, and then there is a need for enhanced disclosure and transparency requirement by the regulators. They need to look into that. And then coordination of policy responses and measures on both domestically and internationally is really critical for us to be able to come up with the post-COVID-19. And definitely, we believe the existing prudential rules that has been issued by IFSB and many other standard setting bodies should be utilized by authorities, and we believe this will be a very good opportunity for us to test the resilience of our standards, as well as the applicability of some of our standards, and then as well as the resilience and the stability of the Islamic financial services industry. Now, for the marketplace, I think there is a need for them to reassess the application of the philosophy for Islamic finance, to see they need to get out of the box to come up with initiatives and take the opportunity and leverage of the technology to be able to be more resilient and for the Islamic financial services to be more stable. I hope there will be an opportunity to discuss more, and I thank you for maybe I need to maybe pause a little for now, and until if there are questions, I will be very pleased to respond to any of those questions. Thank you very much.
Excellent. Thank you very much, Dr. Bello. And of course, we will discuss more with you. And speaking about opportunity, this is, if I may underline a little bit more, this is what I really want to delve from you is that, well, if I may reflect from our friends in the East Asia, there's a proverb, an old proverb, like we would rather, we would better turn on the light rather than we curse the dark, right? So speak,
Absolutely. Absolutely.
right? So what I would
Absolutely.
like to, what I would like to delve from you further is about, rather than, well, yes, we discuss about challenges, and also you discuss about the opportunity. We may have, uh, would you please underline at least two or three important factors that key, what is it? The key acceleration point for us to cope with this COVID-19, or after the COVID-19 as the new frontiers ahead. Yeah, probably. I'll get back to you. I'll get back to
All
you.
right. Thank you. Thank you.
Thank you very much, Dr. Bello, once
All
again.
right.
And so please, big applause for Dr. Bello, Brother Bello
Thank you.
and Meta, Secretary General of IFSB. Thank you very much, Dr. Bello. I'll get back to you again. And now may I now please invite our second key discussant, Mr. Saleh Jelassi. Mr. Jelassi, how are you? From Islamic Development Bank, the head of SDB Gateway Office Indonesia. So what we would like to refer to Mr. Jealousy now is uh, especially about the multilateral development. And this is of a special concern, actually, especially about the role of Islamic Development Bank that has been very much significant, especially in the last decade, and especially after the SDGs has been stipulated in 2015 ago. And also, what are some current challenges that have been dealt by global Islamic economy and finance? So, Mr. Saleh, the screen is yours. How are you, Mr. Jealousy? Assalamu'alaikum.
Thank you very much,
Good to
Brother.
see you. Good to see you.
Good to see you too. Good to see you too. Thank you very much, and good morning, good afternoon to everybody, to the valuable speakers. Let me start by saying Bismillah ar-Rahman ar-Rahim, wa salatu wa salamu ala Sayyidina Muhammadin wa ala alihi wa sahbihi ajma'in. Brother Rizki, speaking after Brother Bukhari, the excellent detailed description of where we stand and the excellent and comprehensive presentation, Dr. Bello put me in quite a disadvantageous position. However, I will try my best to address the points that you have raised. So, distinguished participants, ladies and gentlemen, Assalamu'alaikum warahmatullahi wabarakatuh. First of all, it is a source of immense pleasure for me to participate in this international seminar that seeks to discuss the trajectory of global Islamic economics and finance sector in the post-COVID-19 era. During the time allotted to me, I would like to address three critical questions. First, what has been the impact of COVID-19 on the global Islamic economy and finance? Second, how Islamic economics and finance can contribute to accelerate the process of economic recovery. And finally, permit me to share the perspectives of the Islamic Development Bank Group on how best to respond to the strategic issues and challenges. Distinguished ladies and gentlemen and participants, within just about a decade, our global economy has been hit by two major crises, the global financial crisis of 2008-2009 and the global pandemic crisis that began in 2019 and is still ongoing. The global financial crisis, as we know, had risen out of the actions of market players, bankers, and speculators. Their actions led to to excessive buildup of debt and of risk-taking, resulting in the largest credit bubble in the history. The global pandemic crisis, in contrast, is due to exogenous factors. These factors have hit the real economy directly, whereas the global financial crisis had primarily hit the financial system. They have induced a downturn and a contraction of the global economy expected to be about 5% during 2020. The COVID crisis has hit us at a time when many countries were still suffering from anemic growth and sluggish demand due to the global financial crisis of 2008-2009, unfortunately. At the same time, it is important to note that such downturns emanating from exogenous factors like tsunamis, famine, or pandemic tend on average to have less impact and stay shorter than those emanating from the financial system. This indicates that once the pandemic is over, unfortunately, it is uncertain, but inshallah, the global economy is expected to recover relatively quickly. Islamic finance offers two lines of defense against crisis. One, the tight integration of finance with real economic activities through a prohibition of riba and gharar is the first line of defense against endogenous risks. Two, a strong social safety net via zakat, awqaf, and qard al-hasan offer another line of defense against exogenous risks. By controlling the growth of debt and speculation on one hand, and enhancing the social safety net on the other, the Islamic economy should be able to minimize the possibility of crisis induced by endogenous factors or factors within the system, while withstanding the impact of exogenous shocks, as is the case of COVID-19 crisis. At the same time, we must examine what has been the nature of the impact on the Islamic financial services sector, as we know. Similar to several previous crises, the survival of the financial services industry boils down to three main shortages due to various forbearance measures, such as deferment of principal, interest, and profit payments for the consumer and industrial lending announced by the governments and central banks. The forbearance measures for conventional banks amount to deferment of loans with corresponding adjustment in the interest rate. However, in the case of Islamic banks, the type of the financing contract, be it sales-based or rental-based or partnership-based, and the stage of transaction matter in determining the ease of deferment or foregoing part of the receivables. To deal with COVID-19 crisis, central banks have announced various measures for liquidity support to the banking sector, including lowering reserve requirements, lowering of the regulatory capital buffer, bond and sukuk buying programs, and availability of central bank credit lines, or what we call reverse repo. The first two measures help both the Islamic and conventional banks. However, the last two measures in some jurisdictions are hard to obtain for Islamic banks, either due to non-availability or legal impediments. The immediate impact of the payment deferments of principal and markup will be on the credit growth. Given the slowdown of the economy, banks will have little appetite to expand credit due to higher risk aversion and fear of higher loan losses in the near future. Banks will increase their provision for loan losses to reduce the impact of COVID-19 related defaults after the deferment periods. Beyond this generally adverse impact on profitability, there are different views on whether the impact will be more or less severe on Islamic banks as compared to their conventional counterparts. This is so because until the onset of the pandemic, the Islamic banks sector has been performing almost at par with the overall banking sector in terms of the relative riskiness, profitability, and capital position. Similar to banking, the capital markets, an essential source of capital, are not immune from the impact of COVID-19. with a flurry of expected credit rating downgrades, fund availability will be limited to high-quality issuers, which will likely result in greater severity. The defaults and restructuring are quite likely in the near term, albeit at a much higher cost of funding. For the support of the capital markets, developed economies have announced a set purchase programs. Islamic capital market is the second most significant component of the Islamic finance sector, where sukuk are major contributors, as we know. A significant chunk of the outstanding sukuk are concentrated with the sovereignties and financial institutions. The sovereign sukuk market is expected to be less affected by the pandemic, and in case of any disruptions in the secondary debt market, it is quite likely that sovereign issuers may buy back their sukuk through central banks. The story for the corporate sector sukuk, however, may be different. The immediate effect could be freezing of new sukuk issuances due to uncertainty, leading to an unattractive cost of funding. Specific sectors such as oil and gas, real estate, malls, airlines, restaurants, and hotels might be hit harder than others due to the pandemic. Finally, as far as Islamic equity markets are concerned, there have been several interesting studies in the past that indicate that Sharia-compliant equities performed markedly better than comparable conventional equities. This perhaps confirms the value of risk sharing that is an inherent feature of Islamic finance. Distinguished ladies and gentlemen participants, a distinct feature of Islamic finance is institutionalization of charity and philanthropy in the form of zakat, sadaqah, and awqaf. Not-for-profit modes such as Qard al-Hasan and Kafala are important tools. Together, known as Islamic finance tools, these provide this distinct edge to Islamic finance by providing for safety nets in the economy. As policymakers across the globe agree, safety nets can play an important role in two distinct phases of the crisis, the containment phase and the recovery phase. Since we are looking at a health crisis as well as an economic crisis intertwined together, the policy options will have to consider both. The health crisis calls for expenditure for healthcare, sanitation, testing, and increase in the capacity of quarantine centers and hospitals during the containment phase. During the recovery phase, governments should continue with testing, but invest in scientific research, establishments and laboratories, greenfield hospitals, and healthcare centers in their quest for effective drugs and vaccines and treatment. Safety nets by governments can take various forms for the household, firms, and the financial service sector. Since the impact of the pandemic on these sectors is primarily on the liquidity and solvency, we discuss the policy options to address both. During the containment phase, safety nets should aim at shielding affected people and firms with large, timely, targeted fiscal and financial sector measures such as cash transfers, wage subsidies, unemployment benefits, and credit guarantees. Post-containment measures should aim to fostering recovery, bring back business confidence, and normalized operations and provision of fiscal stimulus. Arguably, Islamic social finance institutions should enjoy varying degrees of independence from the governments. A dominant view is that the institution of zakat, for instance, should be in the government domain, while sadaqah and awqaf are best nurtured in the voluntary sector. In the context of pandemic, however, all the instruments of Islamic social finance should be coordinated together and integrated with the fiscal policy of the governments in the form of safety nets and pro-poor expenditure. The Islamic Development Bank Group firmly believes that regardless of the type of risks facing the economy, in order for the financial system to be resilient, it must be able to distribute the risks in a productive and conducive manner. Risk sharing is a paradigm and not simply a set of contracts. It spans the for-profit domain, such as equities and various forms of partnerships, as well as the not-for-profit domain, including social and solidarity finance. We hope that this crisis will further accelerate the transformation of the global financial system to institutionalize risk sharing and build the proper ecosystem needed to perform its expected functions. Permit me now to share with you how the Islamic Development Bank Group has marshaled all its resources to meet the grave economic challenges posed by this crisis. As you may be aware, most of the ISDB member countries are low or middle income countries with weak healthcare systems and low ratio of health workers with limited capacity to effectively tackle the negative repercussions of the crisis and are thus extremely vulnerable. Many of the countries also have limited resources and systems to put up an effective action plan and response to the outbreak. In addition, several IDB member countries largely rely on commodities, tourism, SMEs, and foreign investment and capital inflows to drive their growth, and hence would be severely impacted due to the global economic and health crisis. As an immediate response to global COVID-19 pandemic, the Islamic Development Bank Group has committed up to $2.3 billion funding package to be extended to its member countries in support of country efforts to fight against the pandemic and to address the adverse effects on their economies. The program envisages a holistic approach in the short, medium, and long term, accommodating priorities beyond the health sector with consideration to the fact that COVID-19 does not only affect people's health, but has also a knock-on effect on their livelihoods through a loss of income and a broader economic growth slowdown as parts of the economy are incapacitated. In order to streamline the support to member countries at different stages of the response capacity and recovery trajectory, the package consists of a Respond, Restore, and Restart program, economic empowerment, and partnership development. The 3R is the flagship ISDB group-wide program and consists of 3 tracks. As I said, the Respond track proposes immediate and fast disbursing actions to assist member countries' response and mitigate the adverse impact of COVID-19 pandemic. It addresses both the emergency needs of the member countries in terms of health and food security to respond to the spread of COVID-19 pandemic, as well as medium-term measures to build the preparedness for future epidemics. In order to support the differentiated and specific needs of the member countries at different stages of the pandemic, the specific projects interventions are tailored to the context of each member country. In principle, it comprises 3 subcomponents: health emergency response, food emergency response, and strengthening the health system. The Restore track, which is the second R under what we call the SPRP, addresses medium-term actions to strengthen the health and economic systems to overcome the pandemic's peak. It envisages financing for SMEs and trade to sustain activity in core strategic value chains to ensure continuity for the necessary supplies, mainly in the health and food sectors and for other essential commodities. The Restart track supports long-term actions to kickstart the economy on a solid and resilient foundation and catalyze private investments. Its focus is on economic resurgence by assisting the member countries to kickstart the economy towards a sustainable growth path. Under this track, in parallel to Respond and Restore track activities, project preparation will be launched for large-scale infrastructure projects identified as essential for enhancing the global value chains in the country. The track will deliver long-term actions to build resilient economies on solid foundations. Distinguished guests, ladies and gentlemen, we are facing, unfortunately, an unusual and unprecedented crisis. The Islamic Development Bank Group has reworked its strategies and action plans to take the challenges heads on. It has opted for out-of-the-box solutions that include repurposing of existing facilities, issuance of sukuk for raising resources, and looks forward to active partnerships with all key stakeholders. In concluding my remarks, let me reiterate my thanks and appreciation to the organizers for being given this valuable opportunity today. And I thank you all for your attention and wish you a successful seminar. Assalamu'alaikum warahmatullahi wabarakatuh.
Waalaikum assalam warahmatullahi wabarakatuh. Whoa, right on time, Mr. Jealousy. I was just about to remind you that you still have about 2 minutes more, but it's all right. That's good. It's all right. But one thing that is very intriguing to discuss further from you that, you talked about the liquidity, lowering the buffer capital, and also most especially about the safety net, the pro-poor, and considering that, if I may add a little bit, some data that we still have about 1.9 billion poor people around the world. So that is more than 1/3. And even the last data is nearly about 2/3 of the total population in the world are still trapped in the poverty line or even below poverty line. So in Indonesia itself, in March 2020, the Statistics Indonesia stated that there are still about 26.42 million people in Indonesia who lives around the poverty line or even below the poverty line. And now that you mentioned about the safety net, pro-poor, the importance of the policies and multilateral development to address the pro-poor programs. So how about the SMEs? I will get back to you with this point. How about the SMEs? How about, because I know the Islamic Development Banks itself has a long credentials of the programs dealing with the poverty to enhance the economic capacity of the poor people. So thank you very much, Mr. Salah Jealousy. Please big applause for Mr. Jealousy. And may I now please invite the next key discussants, Mr. Deden Firman Hendarsya, the Director of Research, Development, Regulation, and Licensing of Islamic Banking, Indonesia Financial Services Authority. With Mr. Deden Hendarsya, of course, we would like to get from your knowledge about and from your vantage point about the regulatory framework, what is the impact of COVID-19 pandemics towards the national Islamic banking here in Indonesia, and how can we learn from these lessons for the future to have the forward looking? So, Mr. Deden Hendarsya, the screen is yours.
Honorable speakers, Dr. Bello, how are you, Dr. Bello? Pak Saleh Jealousy, and also Dr. Frederica Widyasari Dewi, or Dr. Kiki, or Ibu Kiki, and of course our moderator, Honorable Pak Rizky. Fellow guests and participants, Assalamualaikum warahmatullahi wabarakatuh.
Waalaikumsalam warahmatullahi wabarakatuh.
Alhamdulillahirabbil alamin, assalatu wassalamu ala Rasulillah wa ala alihi wa sahbihi ajma'in. First of all, of course, thank you to Bank Indonesia, Masyarakat Ekonomi Syariah atau MES, IAEI, UIII, and KNEKS for this opportunity, for inviting me to this very important discussion. Fellow guests and participants, from our previous speakers, we have gained knowledge about global condition in Islamic finance, and also we learn about Islamic finance landscape from the standard setting body and also from the multilateral development bank's view. And of course, in this opportunity, I will try to deliver a story, maybe the story about Indonesia Islamic finance landscape and how it's condition currently, and also our national policy response, especially for Islamic finance to contribute in accelerating national economy recovery. If I may, I would like to directly go to my slide presentation. So, as July 2020, total Islamic finance asset in Indonesia have reached 1.6 trillion rupiahs, or approximately 111 billion US dollar. A large portion of Islamic finance in Indonesia currently come from Islamic capital market, surprisingly. Especially it's come from the sukuk. So government of Indonesia in the last several years has issuing a lot of portion of sukuk to the global market, also to the national market, and the asset followed by Islamic banking with 37 billion US dollar, or 33%, and of course followed by Islamic non-bank financial institution with asset 7.5 billion US dollar, or only 6.7% of total Islamic finance asset. Amid the slowing performance of national economy due to the uncertain global condition, the Islamic finance industry in 2020 still recorded encouraging growth. If you look at the chart, with more than 10% year-on-year growth in July 2020. Market share of Islamic finance currently reached 9.7% of total financial industry in Indonesia. Considering Indonesia have a large Muslim population and increasing government support to develop Islamic finance, it is very important. The increasing government support to develop Islamic finance industry is expected to grow continuously in the coming years. As I have mentioned before, Islamic banking assets have reached 543 trillion rupiah, or approximately 37 billion US dollar as of July 2020. As well as Islamic finance as a whole, Islamic banking also still showed positive growth despite slowing down, recorded almost 10% year-on-year asset growth, and almost 9% year-on-year deposit growth, and 10% year-on-year financing growth. If we look at the Islamic banking in Indonesia, currently the market share is 6.11%. Maybe it's considered small, but if we look at to the other side, the opportunity is still open, right? Almost 94%. On the next slide, as well as all aware, and Dr. Bello and also Mr. Salah has excellently told us about the impact of current pandemic of COVID-19. Of course, COVID-19 pandemic is also affecting all aspects in global economy, with no exception to Islamic finance industry. However, despite facing an unprecedented challenge this time, new opportunities also lie for industry since supported by trends such as digitalization, sustainability, finance, and also socially responsible investing. In order to support Islamic economy and finance playing vital role in global economic recovery, the stakeholders need to cooperate in designing new strategy and policy. Ladies and gentlemen, OJK have designed several policy measures which are the response to the pandemic impact effectively. And the second is increase demand through supporting the real sectors. And thirdly, strengthening the financial sector, strengthening the financial services sectors. I will not elaborate the first one because as Dr. Bello said, actually the impact and also the policy measures that have been taken more or less similar across the jurisdiction. So I will, in this opportunity, I will focus on the last two policy response for Islamic finance, which are increased demand through supporting the real sectors that will be explaining further through synergy and interconnectedness within Islamic economic ecosystem. And the second, strengthening the financial services through policies such as consolidation and acceleration of Islamic banking digitalization. In the next slide, we'll talk about the synergy and interconnectedness within Islamic economic ecosystem. In order to accelerate national economic recovery, or Indonesia, we know as PAN, the real sector and financial sector should both act together, including boosting the role of Islamic finance to the national economy. Going forward, the development of Islamic finance will focus on synergy and integration between Islamic finance, the real sector, and social finance, which included in Islamic economic ecosystem. Synergy should not only limit it to synergies between Islamic financial institutions, of course, but further synergy with the halal industry, Islamic social fund institution, as well as ministries and other related stakeholders. Synergy with various stakeholders must be carried out with shared awareness of Islamic economic ecosystem. Distinguished guests, ladies and gentlemen, OJK also encouraged Islamic finance institutions to be more competitive in order to serve Islamic economic ecosystem. So the concept of sharing platform that allows Islamic finance institutions to synergize with their conventional parent in terms of improving services, product, IT, and human resource, Islamic finance is expected to have more capacity and better efficiency to serve the Islamic economy ecosystem. In the next slide, one of the strategies to achieve optimum benefit of Islamic economic ecosystem is to strengthen halal value chains. The strategy aims to connect all core and supporting components of the halal industry from upstream to downstream, including the source of financing for the halal industry. Unfortunately, currently, there are some or maybe most of the halal industry players still use financing source from the conventional banking, both in the funding side and also in the lending side. And most of them still use the conventional banking to conduct their financial transaction. Therefore, we encourage financial transaction within the Islamic economic ecosystem to use Islamic financial services. Halal industry booming should be used as momentum for Islamic banking and other Islamic finance institutions in maximizing their services to halal industry through reliable and digital-based financial services. In the next slide, integration of Islamic commercial and social finance to rebuild the real sectors is becoming the hot issues. Actually, it had been touched little by Dr. Bello, also Pak Salah. Islamic finance does not only comprise of commercial aspect, of course, but also social aspect such as zakat, infak, sodako, and wakaf. Those Islamic social finance instruments can play a greater role in helping the government to prevent and alleviate poverty, especially during this pandemic. Integration of commercial aspect and social aspect will maximize the benefit of property. During this pandemic. Integration of commercial aspect and social aspect will maximize the benefit of property. Social funds, Islamic banks customer will more integration of Islamic commercial and social finance, building the economy if managed professionally through the integration of commercial finance and social finance in Islamic banking. Maybe we can add some example of the integration, such as the utilization of zakat, infak, sodako to support debt alleviation of defaulting debtor or court hasan or productive wakaf to rebuild the business post-pandemic through lower or reduced costs. Distinguished guests and participants, in the next slide, another policy measure to utilize Islamic economy and finance for economic recovery is to strengthen the financial services sector through consolidation. There are a lot of existing players in the Islamic financial industry. However, currently there is no large-scale Islamic financial institution in Indonesia. That's why OJK will support when we appreciate the plan of Ministry of State-owned company to merge Islamic banks under its authority to establish large-scale Islamic bank. And we hope these three banks, this merger of three banks will reach the category of book 4, buku 4, or with the minimum core capital of Rp30 trillion. This could be momentum for further strengthen. With this merger, hopefully we will have a big Islamic bank, then maybe can reach at least top 10 in the global Islamic banking industry. And in the final slide, In this pandemic, there is massive changes in people behavior, of course, that could be seen in data released by Google Mobility Reports Indonesia. People are currently more active at home and tend to reduce activities outside the home. The need for face-to-face financial transaction is also being minimized. People consider digital services as health-safe choice. In addition, our data also show that there is a decrease in the number of Islamic bank offices or branches. So in order to survive to these changes, there is a need to massive digital adoption in Islamic financial institutions, including Islamic banks. Moreover, an increasingly borderless world due to digitalization also demands Islamic bank to always develop its technological infrastructure in order to improve its services to customers that demand faster, more comfortable, and better services. Currently, several Islamic banks have started to digitalize its products and services to support Islamic banking services and operation, such as an online boarding customer, an online customer boarding, onboarding that allow customer to open bank account online, and also the utilization of electronic form, of course, and then the use of QR code and API and other financial technologies that could be added value for customer in interacting with Islamic bank. Distinguished guests, ladies and gentlemen, for the time being, that's all my presentation. I hope this discussion will benefit us in order to formulate the best strategy for Islamic finance, of course, and I'll be happy to elaborate and have a discussion more at the Q&A session. Thank you, Pak Ricky. Assalamualaikum warahmatullahi wabarakatuh.
Waalaikumsalam warahmatullahi wabarakatuh. Pak Deden, you still actually have 2 more minutes. But do you want to use this or we will recap that in the forthcoming discussions, right?
Yeah, I think we can elaborate it a little bit more detail in our Q&A session.
All right, thank you very much, Pak Deden, and that's very intriguing with your presentation. And if I may highlight one point to be discussed further, is about in the matter of the lessons learned from Indonesia. So what can we actually contribute? What are the key points that we can contribute to the world in terms of developing the national Islamic finance institutions post COVID-19, or in terms of forward looking itself about what should we do after the COVID pandemic is done or is accomplished, or but we will get back to you later with this question. So thank you very much again, Pak Deden. Speaking about regulatory framework, I was noticed by the host from the Secretariat of Masyarakat Ekonomi Syariah that along with us together here also present Ibu Dwi Iriani Hadiningdiah, Sarjana Hukum, Master of Arts, Director of Sharia Financing, the Ministry of Finance, Republic of Indonesia. A very good afternoon. Assalamualaikum, Ibu Dwi. Please, after this, when we start the discussion from the floor, we would like to hear from you as well, if you would like to, if you don't mind. And also, Dr. Sultan Emir Hidayat, my very good colleague from the National Committee of Economics and Sharia Finance as well. After this, we would like to wish you to talk. But now, before we proceed further, may I now please invite, last but not least, of course, we still have Ibu Dr. Friderica Widyasari Dewi, President Director of PT Dana Reksa Sekuritas, a good friend, and she is also invited here specifically because Indonesia was proud of her. In May 2019, she was featured on NASDAQ worldwide. And That's why we would like to delve from her about what's going on the field, actually, what's going on from the real industry, how to tackle this, and with the bottom line, we will also discuss from the session after Ibu Frederica speaks. Are we on the track, or do we still need more time to cope with this COVID-19 pandemics? Okay, so Dr. Frederica, the screen is yours.
Thank you so much, Mr. Ricky or Mas Rizky. First of all, thank you very much for invited me to speak in this very honorable event occasion.
How are you, Bu Kiki?
Good. How are you, Mas Rizky?
I'm good. I'm good. Thank you very much. Good to see you again.
Good to see you again. So I would like to thanks Bank of Indonesia, OJK, Economic Sharia Community or MAS, IAEI, IAEI, KNEKS, and also want to say hi to all distinguished speakers, and of course the lead discussant, Mas Rizky, Mr. Sabelo, Mr. Jelasi, Mr. Deden, and all participants. Assalamualaikum warahmatullahi wabarakatuh.
Waalaikumsalam warahmatullahi wabarakatuh.
Mas Rizky, this is very hard time for me because I have to speak after three prominent speakers. So I hope I still can give added value.
Of course.
Participants.
The last weapon is the most significant one, I believe.
Thank you. I don't mind either if Budwi would like to speak first, but it's okay if you already assigned me to speak first before her. Okay. Let me. Can I have my share screen? Yeah, here. Responding to the current situation and developments in Islamic finance and related regulation. Yeah, the Indonesia capital market during the current pandemic. You had a very interesting question to Pak Deden, yeah, or to me as well. How is it going? The truth is, I believe that nobody knows the exact thing what will happen, because this kind of pandemic or this kind of crisis that caused by a disease, yeah, I think most of us who are still alive now has no experience on this kind of crisis before. Because the last time this kind of pandemic happened, 1918, Spanish flu. At the time, the economic was very different because the economic was not globally interconnected like current time. So this current pandemic really caused us this kind of situation that is at the very beginning of the time, like in March 2020, like most of us was kind of confused what was happening, and this really cost badly to the market also in Indonesia. These slides, I want to show you the difference between the current crisis compared to the crisis that happened in 1998 and to 2008. Well, some of you might already seen this kind of explanation before, but I would like to show you some indicators such as GDP growth, currency depreciation, inflation, policy rate, NPL, and foreign reserve. Some of the indicators show that this year or in 2020, some indicators show that we are in a better situation than what we had in 2008 and 1998. Yeah, such as for foreign reserve, NPL, yeah, and also inflation, depreciation. But for GDP growth, at the time in 2008, I remember when I was still in the stock exchange, the growth was very impressive, or 6%, but still we had the impact of the financial crisis that happened this time. Next. How is the position of Indonesia compared to other emerging markets? We can see here that Indonesia economic prospect continues at a healthy pace among emerging markets. We compare here with South Africa, Russia, Argentina, Turkey, and Brazil. In terms of exchange rate, we are in a minus 7.3, but still better compared to other emerging markets. And also for inflation in September year on year, it's very manageable in 1.42. And GDP growth, Indonesia now we have a minus 5.3%, but compared to other emerging markets, we're still ahead. And also in a policy rate as September 2020. Next. What about the Jakarta Composite Index? Here, we see here that most of the stock markets faced turmoil during the COVID-19 pandemic. Only several indices still have been increasing this year. But I can say here actually that before this pandemic time, even in end of 2019, I remember that all analysts was very bullish about coming year 2020, and nobody expected this kind of situation could happen and impacted badly to our market, economic, and finance industry. In Jakarta Composite Index fell by 22.7% during third quarter in 2020, better than several countries such as Singapore, Philippines, and Colombia, but we are behind some other markets. Like we can see here that some markets still have positive growth. Next. Net flow in equity and the fixed income market during pandemic is also a very important indicator that we have to take a look. The increased risk, of course, has prompted investors to sell off in emerging market. This is very normal and predictable. When this kind of uncertainty happens, investors tend to move to safe haven instruments. So they sold out investments in emerging market like Indonesia. They went for a safe haven instruments, and it caused the flight to quality kind of thing. Total outflow that occurred in Indonesia capital market reached 10.4 million from January to September 2020. It also happened for equity and fixed income. Next. For the Jakarta Composite Index itself, actually, as I said before this pandemic, we usually, when we tell story for investors, foreign and also domestic, we always say that Indonesia is one of the best places to invest for long-term investors. We can see the growth in the last 10 years has been growing significantly, but because of the pandemic, the 10-year growth decreased to only 99.4% or around 6.61% per annum. Next. What about sectoral indices trend in the midst of pandemic? The recovery trend occurred when a large-scale social restriction or PSBB relaxation was implemented. We can see here that we had phase 1, and then the next phase is relaxation, and the PSBB phase 2. We can see here that because of the second PSBB, market also react negatively. Here we can see some sectors. Yeah, also maybe I can move to the next slide, please. But however, despite the market conditions, the most interesting part is that the number of capital market investors continues to grow. And amazingly, this has been a big help for our market, especially for IPOs, that these retail investors became the cushion for the IPO for our market. We can see here, yes, the number has been growing significantly. We can see from 2017 to September 2020, the number of the investor increased significantly for 1 million investors to 3.2 million investors. And the most interesting part is that the activity of these retail investors has been growing significantly. Next. The daily average of active investors transacting in 2020 reached 76,000 SID. We call this single investor identity, a single number for each investors. Yeah. This compared to only 55,000 SID in 2019 for the active investor. The highest recorded on 31st of August 2020 with 136,000 active investors. Maybe it's because of the work from home things that people have more, they can manage the time by themselves. Maybe if people were in the office, they couldn't really invest in the online system by themselves, like freely, but with the work from home activity, they can manage their work and the investment better. So this bring positive impact to our market, that the participation or the activity of local retail investor has been growing significantly. Next. The transaction volume dropped, yes, but retail participation increased significantly. This number can show you clearly that in the right side, we can see that before the pandemic time, the daily transaction value in Indonesia capital market was about 9 trillion rupiah a day. But because of the pandemic, it fell down to 7.8 trillion a day. And also the average daily trading volume also decreased significantly. But the interesting part is the daily number of trades, the average increased significantly. This shows that the activity in retail investor participation during the pandemic has been increasing significantly. Next. Retail investor dominated transaction value in 2020. This can show us, in terms of ownership, the contribution of retail investor has continued to increase over the last few years. As September 2020, retail investor ownership was 12.3%, up to 1.7% from the end of 2019. And for the trading value, per September 2020, retail investors dominated the transaction value this year by 43.4%. Yeah. This is very interesting. While the foreign investor tend to hold the investment and kind of wait and see to see the situation getting better, but the retail investor, they keep doing the transaction. Meanwhile, for the domestic institutional also decreased, at what I explained before. Next. What about in Sharia, Indonesia Sharia market? Here is the data. This chart, this what I want to say here is in the pandemic time, the Jakarta Composite Index minus year to date minus 20.0 something, and that's the highest performance of the Indonesia index. Followed by, this is interesting, followed by the ISSI or Islamic Sharia Stock Index, and then the followed by Jakarta Islamic Index, and even these two Islamic Index, ISSI and JII, beat the index that usually mostly used or most prominent index called Liquid 45. This also consistent with Dr. Bello said in the beginning, that Sharia stock in the index show that the performance relatively better than other. Next. And as of September 2020, the number of total stock listed on the Indonesia Stock Exchange was 707. This is also amazing, actually, because in the pandemic time, there was still almost 30 new listed insurers that happened in 2020. Means, although this current situation, but some of the companies still had a belief or confidence in our market. This consists of 444 Sharia stock. This number also increased significantly. I remember in almost 10 years ago, the number was only 237 Sharia listed shares. But now it's almost double to 451 Sharia stocks. It's very interesting. What about in market capitalization? In terms of market capitalization, Sharia stocks have similar figures with conventional stock. And both Sharia and conventional have decreased during to the 2020 due to pandemic time. Yes, of course. Next. This is the profile in overall. The number of Sharia stocks is very interesting. To the total Sharia, to the total stock that is listed in the Jakarta Indonesia Stock Exchange, 64 of them are Sharia stocks. For the market capitalization, 52% of the total market capitalization also derived from Sharia stock. And also for the transaction volume, speak for 66% of the total transaction volume in our market. Also for Sharia trading frequency, it speaks for 67%. And also the value is more than 50. Means actually people have interest in the Sharia stock, or possibly they not really look at the Sharia itself, but indeed the fact that Sharia stock usually perform better than other, especially in the pandemic time. Next. The number of Sharia investors increased since the establishment of Sharia online trading system. This I also would like to thanks to OJK, Bank Indonesia, and MES, IAEI, that we been doing this together to increase the number of investors, Sharia investors in Indonesia. This is the fact that when back then I was with my team doing this education to people from the most east to the west, from Sumatra to Papua. So at the time, people were asking whether investing in capital market is Sharia accordance or not. Then we talked with Ulama Council. We asked for Fatwa, and we got the Fatwa number 80. And this really boosts the confidence of Indonesia people to invest in Indonesia capital market. We can see this number. Next. This just show in clear way that the annual growth of Sharia investors is higher than the conventional investors. We can see here that from year 2015 to 2019, it was beat the number of the annual growth of conventional investors. Next. For Indonesia, Islamic finance industry also continue to grow consistently. As of September 2020, the Sharia capital market outstanding down by 40%. Yeah, the decline, the finance industry, the Islamic finance industry continue to grow consistently. Next. This for Indonesia sukuk also still dominated by the government. I think Ibu Dwi can speak more on this because he is the one from the finance ministry. Next. There are the fatwa on Islamic capital market Indonesia. There are 20 fatwa about Islamic capital market from 130 fatwa from Ulama Council. This I can confess that the SNMUI has been very productive in delivering a fatwa on Islamic capital market. This is very, I'm so proud of it for the MUI for supporting the growth of industry also in the Islamic, in the capital market. Also, there are 15 fatwa about Islamic investment products from 20 fatwa about Islamic capital market. So in order to develop the Islamic capital market in accordance with Islamic principle, the National Sharia Board Indonesia Ulama Council has issued the latest fatwa about Syukuk Wakalah, yeah, and is finalizing the fatwa regarding Sharia compliant on clearing and guarantee services. So when I was the CEO of Indonesia Central Security Depository, Alhamdulillah, we also had the fatwa number 124 for the Central Security and Depository. So this complete the journey of investor to have a Sharia investment in the capital market, from the trading mechanism, from the stocks, from the online trading system, in the brokerage system, and also in the custodian bank, and also in the Central Security Depository, and they just finished the finalizing the Central Clearing and Guarantee Service. Alhamdulillah, thank you so much. Next.
Bu Kiki, 2 more minutes, please, if I may.
Yes.
Thank
Okay.
you very much.
No problem. Okay, I just skip this. I will go for the last two slide. Yeah, this post-pandemic analysis. Yeah. What I can see here, actually, the disruption of supply demand was not uniform among the sectors. We can see that manufacturing, trade, and agriculture. Yeah, 2 of the 3 biggest sectors by GDP contracted considerably, with manufacturing and wholesale for 6.7% in the second quarter, while agriculture remained robust, posting 2.2 growth. And I think, Mas Rizky, this is very technical, but if somebody or anyone asks me about what sector will perform better in 2021, for our research team, I can give an answer, but because of the time constraint, then I'll end my presentation here. Hope that we can have a discussion later in the Q&A session. Thank you, Mas Rizky.
Okay. Thank you very much, Dr. Frederica Widyasari Dewi. That was very intriguing. So in short, Bu Kiki, but it's okay if you would like to answer this later. In short, are the investors still confident in Islamic finance index or in Islamic finance in overall? And also, yes, indeed, that was about my question for you. What sectors are they prefer to choose, most especially during this pandemics and in regards to the forward looking after the pandemics, what would be which of the sectors would be more potential to grow? That's good. All right. So, but first of all, big applause for Ibu Frederica Widyasari Dewi. Okay. So we will start with the question and answer. First, I need to say hi for a while, Bapak Firman Wibowo, the CEO of BNI Sharia. I was acknowledged by the friends in the host and the secretariat, and also the CEO of Bank Bukopin Sharia as well, together with us here. And so distinguished key discussions. Now it's time for us to hear from the floor. If I may now invite Ibu Dwi, the Director of the Sharia Financing Ministry of Finance Republic of Indonesia. Please, Ibu Dwi. Now you can, or maybe friends, the committee can help to unmute Ibu Dwi's mic for a while, and yeah, let's start the discussions. Please, Ibu Dwi, the screen is yours now. How are you, Ibu Dwi? Assalamualaikum.
Sorry, I couldn't unmute.
Okay, it's all right.
Oh, okay.
Yeah, we can hear you now.
Thank you. Good morning and good afternoon, everyone. First of all, I would like to congratulate to PI for conducting this excellent event, and thank you to all prominent speakers for comprehensive and rich of information this afternoon. Yeah, of course, I have not prepared any presentation, of course, because my task is to respond what the speakers just shared to us, right? And I think all prominent speakers and as well as Pak Bukhari on his speech just respond about the COVID-19 that affecting the global economy, including direct impact on production, supply chain, and market disruption, as well as financial impact and financial market. As we know that the impact of COVID-19 to the government, of course, declining the tax income. It means declining on revenue and increased budget spending to support economic through stimulus to support social and safety net. And the government of Indonesia is to adjust the policy, as we know, even through enacted new law to leverage the deficit from maximum 3% to 6.34% for now. And here I just would like to share a little bit because about Suko, who almost all speakers mentioned about government Suko. Government Suko names Suko Negara and issued since 2008. And now we issued total issuance from 12 years reach more than 1,500 trillion IDR. And we do a lot of innovations, not only for budget financing, but we also use for proceeds of Suko to finance direct for infrastructure. And we do also creative financing through Green Suko. And since 2018, we introduced online platform issuing retail Suko. It's very helpful. It means 2 years before pandemic, we already prepare actually because we already issue with online platform with retail. And the evidence of the platform, the recent issuance for retail Suko in September, we issue with the target 5 trillion IDR, but we achieve 5 times oversubscribed. It means more than 25 trillion IDR. So this is very amazing because in these situations, in this pandemic time, as we know that people less spending and have idle money, but they have to invest their money in this kind of instrument, safe and then liquid. That's why usually we issue once for the tradable retail Suko, but for this year we offer 2 times to give a chance people can invest their money through our retail tradable Suko. But not stop for our innovations. We still continue to do innovation, especially on social Suko. I mentioned before that we successfully do cash wakafling Suko on March through private placement. The return of the cash wakafling Suko utilized to support the hospital for retina center, and just yesterday already launched by our vice president for the hospital. And also for cash wakafling Suko, we introduced for cash wakafling Suko retail, and launching by our minister Ibu Sri Mulyani on 9th of October.
Okay,
And
one more minute, Ibu.
yeah.
Excuse me, if I may, one more minute, please.
Oh, sure, sure. I want to say that this is a good instrument that maybe can make market deepening for this situation. And also, I just want to share that we successfully issue global suku in this pandemic, and I think the demand is more than 10 times of our target. So successfully, and we issue with the new tenor, 30 years tenor, and also we still issue with crypto. So that's our experience in this SUKO, and hopefully we can support more to Islamic market in domestic as well as in global market. Thank you, Pak.
Thank you, Ibu. And that's very extraordinary. I think during the pandemics, 10 times incremental of demand, and that's quite stunning. Ibu Frederica, I want to hear from you about how you respond on this one from the field. Actually, what is actually intriguing the people to have more interest in taking the suku. Yeah, but first I go to Dr. Amir, Sultan Amir Hidayat. Are you still with us, Dr. Amir? 5 minutes, if you may I now please invite Dr. Sultan Amir Hidayat to give some more response to intrigue the discussion as well. How are you, Dr. Sultan Amir? Assalamualaikum. Okay, the screen is yours now. Dr. Sultan Emir is now the director of the National Committee of Sharia Economics and Finance.
Assalamualaikum.
Waalaikumsalam warahmatullah. So the screen is yours, brother.
How are you, Prof?
How are you, Prof? Long time no seeing you.
Long time no see.
All right. So, any comment on this? Any comment on this matter?
Please allow me to greet my long-time old friend, Dr. Bello Danbata. Assalamualaikum, Dr. Bello.
Waalaikumsalam, Prof. How are you?
Alhamdulillah. How are you, Prof?
Alhamdulillah. Good to see you.
Yeah. He is among the first persons whom I met during my PhD journey in IIUM.
Yes, absolutely.
I also would like to greet Mr. Saleh Jalesi. Assalamualaikum, Mr. Saleh, Pak Ahmad Bukhari, Pak Deden, Dr. Federica, Bu Dwi, and I also saw Professor Bambang Sudibyo from Basnas and other dignitaries. Assalamualaikum warahmatullahi wabarakatuh to all. Actually, I'm very excited to listen to the speaker's presentation, starting from Pak Bukhari to Dr. Frederica. Actually, all of them came up with very comprehensive and exceptional presentation. Since I was asked to raise question, please let me start by stating Indonesia's vision, as mentioned in our master plan of Islamic economy in 2019-2024, which is prosperous, civilized, and self-sustained Indonesia by becoming the global hub of Islamic economy. From that, it is very clear that Indonesia aims to become the global hub. So my question to all the speakers is, what does Indonesia need actually to become the global hub of Islamic economy and finance? And I also have a specific question for Mr. Saleh Jalesi. What are the potential areas of partnership between Indonesian government, let's say here represented by the National Committee, KNEKS, and of course the ISDB group? Thank you, Professor Rizky.
Thank you very much, Prof. Emir. I noticed that probably you're still working from home or somewhere, but stay healthy and safe. Yeah, Dr. Emir Sultan Emir Hidayat, the director of KNEKS, and yeah. So now let's start to discuss. And Pak Deden, I would like to hear from you about to respond from Ibu Dwi, and to Dr. Bello. We have one question for you from the floor. Yeah. Wait, please. Okay. So it's from wait. Excuse me, please. Because okay, for Dr. Bello, the very first the question is, how can we accelerate the economic growth in this recession era? How can we make sure that the higher economic growth that we get, the more prosper, more job vacant will be available? So it's from Mr. Muhammad Iksan, Bang Bengkulu. And also this one is for Mr. Salah Jalasi as well. And from the question from Ibu Herlini, a lecturer from Ahmad Dahlan, ITB Ahmad Dahlan, Jakarta, Karawaci. Is there any strategy from the Indonesia Financial Services Authority? I think this one is for Pak Deden, or any Muslim institutions in Indonesia to encourage the spirit of entrepreneurship from campus. And one interesting, following what Dr. Amir just stated and just asked, this one is for Prof. Salah again, from Mr. Salah Jalasi again. I'm interested in your idea that risk sharing paradigm is the key in Islamic finance, which is challenged in facing this pandemic era. Unfortunately, as we know that funding in Islamic bank in Indonesia is almost 100% based on murabaha mutlaqah. In my opinion, risk sharing is suitable only when funding is based on mudarabah muqayyadah, where funder may review the risk of projects on their own. So it's more allocation of fund than pool of fund. What do you think? And how do Islamic banking outside Indonesia raise their fund? From Khairul Aslam. Okay, so now the time is yours. So I think Dr. Bello goes first. Especially,
all right.
Yeah,
thank you.
With the key opportunities that I would like to find from you. Please, the time is yours, Dr. Bello.
All right, thank you very much, Dr. Rizki. I mean, it is a very good discussion that has been presented by the speakers. But to just go straight to the questions, I believe the written question is similar to the same question that is asked by my good friend, Dr. Amir Sultan. I believe there are, for now, I can mention two important points that are really needed for Indonesia to achieve its aspirations at the global hub for Islamic financial services industry, as well as to accelerate this process and for the benefit of the global economy, as well as particularly the Indonesia. First, we all know that digitalization, as we mentioned, is an enabler, and is the next frontier. So accelerated digitalization will now definitely challenge all of us, the governments, the regulators, the institutions, the individuals, workers and non-workers, in the sense that now we know that now even going to the masjid because of the COVID-19, when you have to use your mobile phone to not only order food and so on, but also to be able to put some update regarding your temperature and particulates wherever you go. So there is a need for all the stakeholders, particularly I will start with the governments, the regulators and supervisory authorities, to ensure that there is enhanced, accelerated infrastructure relevant to regulate and supervise the accelerated digitalization. Is very, very essential, because one thing is certain. People will continue to use technology, but the risks will continue to evolve. So there is a need to build a capacity and to build the right infrastructure to enable the environment and the society embrace this technology, because it will be useful for the institutions, it will be useful for the individuals. That's the first point. Now, the second important point is what I call integrated financial inclusion policies and products. Integrated financial inclusion policies and products, this has to do with basically the integration of technology, the integration of Islamic principles and values, the integration of humanity, the integration of the environment, as well as the prosperity of the institutions and the people in whatever policies and product that has to be developed by both the regulators in terms of the policies and governments, by regulators and governments, as well as by the institutions. This is very, very essential and critical in the sense that the pandemic now has changed the way we view wealth, the way we view life entirely, because now with the lockdown, during the lockdown, if you have 3 cars, you don't need any one of that. And if you have so many clothes, you realize that, I mean, the life is not all about accumulating wealth. So we believe that there should be some component of humanity in whatever products that are to be introduced. There should be some component of environment consideration. A lot of ideas has been initiated, but now we are talking about the integrated financial inclusion policies. So financial inclusion just goes beyond just financial inclusion or inclusive finance, but we want it to be integrated with technology, with the environment, with the Islamic principles and values, as well as the humanity and minds. It's not all about bottom line. It's all about prosperity, economic prosperity of the people, of the society, as well as of the country. So this is very essential. And it is in this regard that I would like to also mention that the IFSB will have proactively issued the first financial inclusion standards ever, which has never been issued by any standard setting body. We have our council members has approved this financial inclusion standard, which is technical note on financial inclusion, in which we cover financial technology, that is fintech. We have covered Islamic social finance, waqaf, sadaqah, and some component of application of zakat. And we also have covered some Islamic capital market, structures. So this pave the way and provide the guidance that is needed. If initially the institutions and the regulators were saying that there is no standard guidelines on how they will be able to monitor and regulate this, and now we are we have already come up with that, and then we will be in our future work coming up with new initiatives, particularly on super tech, supervisory regulatory technology, and regulatory technology as well, for both banking and insurance. So we believe these are the critical success factors for Indonesia to be able to achieve its aspirations. So I think this is what I will mention for now. I hope I answered your questions.
That's brilliant, Dr. Bello. Thank you very much. And furthermore, a little bit, speaking about the SDGs, speaking about the ESG. So this is also the same question, similar question with Ms. Novelia Aisha. How do we implement, and how is the prospect of SDGs itself in here? My last question for you today.
All right, thank you. I think the ESGs and the SDGs, we should stop looking at it from the top down. We should look at it from bottom up.
Okay.
In the sense that we have to look at the community being integrated, and they have to look at what are the things that are really going to support the poverty alleviation. All the 17 sustainable development goals cannot be achieved by just policies. It must be integrated into the society, into the community. Products to be provided by the Islamic financial services industries has to be looking at the real economic sector and the real society and community that we have around us. So I think this is essential. The financial institutions have to look at initiatives and projects that will support the development of ESGs goals, as well as the sustainable development goals. So I believe the sustainable development goals are all in line. Majority are based on our studies. About 9 of them are actually in line with the Maqasid Sharia, and they are actually achievable. And we believe this by focusing on this, you'll be able to achieve the rest of the 8 sustainable development goals. So Islamic finance and Islamic economy is integrated. Sharia is very, very comprehensive and very universal and very dynamic in achieving whatever aspiration that we want to have. But what is important is now to start looking at what is needed at the grassroots, what is needed at the community level. The policies will have to look into the real economic society that we are working on. Now, I believe the pandemic gave us the opportunity to have a revised macroeconomic and microeconomic frameworks, which will be beneficial for all. So I think this is what I will just, in a broader time, in a high level kind of perspective, that I will be able to highlight.
Okay, thank you very much, Dr. Bello. And maybe later, I'll get back to you later. Just come from Dr. Ridwan Basalama from University of Islam Malang, described in the the Al-Quran, Surah Al-Baqarah, verse 275, Allah said, and people who is standing shamed because of a mad disease, then I'm interested in what is conveyed by Dr. Bello. He said, Dr. Ridwan said, about credit risk. This is, of course, very closely related interest. How do you think about companies or institutions that still apply interest, especially in relation with credit? Keep this with you, Dr. Bello. I'll get back to you, please. And then,
Thank you, thank you, thank you.
may I now go first to Mr. Jealousy. Mr. Jealousy, the time is yours. About the SMEs, about the proper programs, and also about several questions from the floor. Okay, now the screen is yours. Yes,
yes.
Mr. Jealousy.
Are you hearing me now?
Yes, I can hear you now.
The host just allowed me to unmute.
Okay.
So sorry for the slight delay. So Bismillah ar-Rahman ar-Rahim again. I'll try to pull up, arrange my thoughts to address most of the questions that and your remarks and comments that you have provided me with. Let me first of all focus on the light, as you said, rather than the darkness. وعسى أن تكرهوا شيئا وهو خير لكم. I mean, this crisis may be a blessing in disguise. I mean, unfortunately, I mean, it's there, and I think you know, there are a lot of things that we have to learn from this crisis. Up till this crisis, I mean, everybody was talking about growth, basically, the focus on growth. You know, assessing the progress in achieving the SDGs and realizing the SDGs, etc., was our major focus. However, I think you know, fragility was inherent, unfortunately, in most of our member countries, who are, as I said in my presentation, are least developed or either you know, low or mid income countries. So the focus should be on resilient growth. I mean, the paradigm should be shifted towards focusing on resilient growth, and to do that, you've highlighted, Brother Bukhari has highlighted a certain aspect which I liked. It's the flexibility, how to deal with this crisis, which is important. You know, certain awqaf being transformed into hospitals. Dr. Bello has mentioned the you know, digitalization, and you know, as a tool that we are all, I mean, having this seminar virtually is a witness of that. You know, certain out of the box solutions that we are learning from this crisis. SDGs, you know, maqasid al-sharia. I'll focus on maqasid al-sharia and the SDGs. So the focus should be on sustaining any achievements rather than you know, focusing very much on the growth aspect of it, without seeing whether this is a sustainable growth and whether these achievements could be sustained in the face of such crisis. If you look at it, you know, from a global point of view, the crisis could be an opportunity. Okay, because you know, globalization is the name of the game. You know, for the last few decades, and most of our member countries, the 57 member countries of the OIC, within this context, they were struggling in positioning themselves in this global, what we call the global value chains. Okay? So this crisis has, you know, you know, has given us an opportunity to reposition ourselves with the shift more on regional value chains. As you know, the crisis, you know, has put certain challenges in the global value chain aspect, and this is indeed an opportunity that we, if our member countries could seize then it could change the way we look at things after, inshallah. So this is the light, as the proverb says, the best time to plant a tree is 20 years ago, and the next best time is right now. And I think it is a good opportunity that we should see. Now coming back to growth, resilience of growth. There was a question on that. I will link it to the SMEs. I think it's not increasing growth or enhancing growth. I mean, this is maintaining growth, which should be our major concern within this crisis. And I think SMEs is the backbone of our economies, and that explains, with their huge impact and share in employment, exports, and the contribution to growth. And this explains maybe the loss of the 25 million jobs till now globally as a result of the crisis. How to assist the SMEs who are very fragile, as you know. Certain studies, predict that most, maybe 70% of the SMEs could vanish, within 6 months of a severe crisis. So it is very important to step in. It is important for governments and all the development players to provide SMEs with the necessary support. Of course, it's straightforward. Why are they facing this? Of course, the reduced customer demand, supply chain disruptions, delays in government business, distribution chain disruption, a reduction in investor demand are all factors who have put this burden on the SMEs. How to deal with that? It's straightforward. Tax, providing SMEs with tax breaks, financial access, loans, grants, subsidies. As well as, of course, it's important with the necessary capacity building so that, to help them in coping with the operational stress generated by the COVID-19. I'll come back to a question regarding the risk sharing aspect of the Islamic, finance and economics. And then the focus on Mudaraba. Yes, I understand. Till now, unfortunately, the Maqasid al-Sharia is clear, and the focus of the industry, of the Islamic financial and economic industry, has been on murabahas, on commodity murabahas, etc., which are by nature, short-term modes. However, the essence, I think, of the Islamic finance should be more focused on risk sharing, which could, channel the inherent potential that is existing in our economies, to channel, short-term funding to long-term infrastructure and development project. At least this is my view as a development practitioner in the Islamic Development Bank for the last 20 years, and I stand to be corrected. However, I think risk sharing is indeed the most or the strongest aspect of this industry that we need to capitalize on in serving any growth as well as any development efforts in our member countries. Indonesia, one question, Indonesia has everything to be the global hub in Islamic finance and economics, with its population, vibrant population, well-trained, young workforce, as well as the potential and the innovative nature of its people. IDB, of course, what our IDB will be, has been there for the last 44 years, and will continue to play its due role, whether it is through the Islamic Research and Training Institute, whether through financing, equity participations, awqaf, as well as trade financing through the trade financing arm, ITFC, ICD, the private sector arm, as well as providing the necessary guarantees through ICEC. And we wish Indonesia all the best in this journey, and we are confident that it has started already taking the lead, and it will continue doing so. Thank you very much.
Thank you very much, Mr. Jealousy. Oh, that's relieving, and that's splendid to hear from you. That Indonesia has everything to be the hub of global Islamic finance, and that's, yeah, hopefully, inshallah. Thank you very much. And if I may highlight something that is quite important for today is, now is the right time, according to you. Now is the right time to plan and grow the future. Instead of we are staying trapped in the vortex of the predicaments nowadays. But let's start the journey for the next marathon, not the sprint race. Is that, if I may reflect in other words? Thank you very much, Mr. Jealousy. We will get back to you later at the end of this session. And may I go to Pak Deden first? Pak Deden, how do you respond, Ibu Dwi, and also the questions about including the campus for the future programs of Islamic financial or Islamic economics at large? Please, the time is yours, Pak Deden.
Okay, thank you, Pak Rizky. I will first start with Pak Salah's statement that Indonesia have everything actually to become a hub of Islamic financial hub internationally. I also agree with Dr. Bello with all of his statement. So to become a global hub, I think first we have to grab our national market, because I agree with Pak Salah, we have a very, very huge potential market in Indonesia for Islamic finance. So I will divide at least to 4 parts what we need to do. First, we need awareness. I will divide this awareness to big group. First is awareness from government. Currently, yes, we have a very, very huge support from governments. If we talk Islamic finance 10 years ago, we will not have this kind of webinar. I told you.
Indeed,
because because only some of us aware about Islamic finance, including maybe only 1, 3, or 4 government institutions also aware about Islamic finance. But currently, almost all of the government institutional aware about Islamic finance and have a unit at least to handle the Islamic finance, to discuss the Islamic finance issue. The second is awareness, of course, from our society, or from people of Indonesia. We are a biggest Muslim society in the world, biggest Muslim population, but our Islamic finance literacy is very low. If I talk about education, I know that some of the participants maybe will comment that that's a classic issue, education. But the fact is, our Islamic financial literacy only 9% based on OJK survey at the end of 2019. So I agree with Dr. Bello that literacy is very, very important because this literacy is actually will be the base of our demand on Islamic finance product. And so the first is awareness from the demand side, and the second is of course from the supply side. From the supply side, again, I agree with Dr. Bello. Infrastructure is the most important thing. By infrastructure, I mean including the adoption of technology and also the capability of human resource. Adoption of technology is a must. Like I said before in my presentation, also in other speakers' presentation, digitalization is also a must in current condition. And then after the infrastructure, the third one is synergy. Synergy first, of course, nationally. I mentioned before that we have to build the synergy between the industry players, among the industry player, the regulator, and the government, of course, and all of the stakeholders in Islamic finance. And of course, we are thank you to Committee Nasional Ekonomi and Keuangan Syariah, because currently we have a committee that handle this issue, the harmonization between the policy in one institution to the other institution, between the regulator, also the industry, the industry players, and so on. And of course, if we want to become a global hub, of course we have to have synergy with the global players or the global stakeholders. Yes, currently we already have a very good synergy communication with the IFSB, also with the ISDB. But in my opinion, this kind of synergy is we still need more with between our industry players with the other international players all around the world. So and the fourth one, I think it's also important. The fourth one is, in my opinion, to become a big industry player in national financial industry. Islamic finance institution has a uniqueness or add value compared to the conventional one. So I think I said before that one of the uniqueness that we can build is the relation with the social finance institution. I think that four factors that we have to strengthen to become a big player in the national industry, also to become a global hub of Islamic finance. Thank you, Pak Riki.
Thank you, Pak Deden. Thank you very much. Thank you very much indeed. So financial literacy is a must nowadays, and that will make the key differential and pivotal point for the future, I suppose. And yeah, this is also in line with what Dr. Bello said about the SDGs, and what Mr. Jealousy also said about Indonesia is able to face the future to become the global hub for Islamic finance, and that is underlined with the same red line, with the same tie under the literacy and capacity building, and also the networking, global partnership, and synergy. All right, thank you very much. Brilliant, Pak Deden. And now, may I go to Dr. Kiki? Bu Kiki, yeah, please respond, Pak Emir, Dr. Emir Hidayat just now, and also Bu Dwi. And I'm interested. What makes it what makes them interested to in our suku, and also there's a significant 10 times incremental of the suku, what's the main what's the main interest for the investors in or are the investors still interested in our Sharia financial instruments, and which sector is it for forward looking, at least in the next year 2021. All right, so time is yours now,
Thank you,
Bukiki.
Dr. Rizky.
Yeah,
I want to share with you and all participants here my empirical experience about developing the Indonesia Sharia capital market. One of the speaker also touched that, I think what was Pak Deden, yeah. He said that 10 years ago, probably if we talk about Sharia, nobody would be interested at all. That also happened to me when I was in Indonesia Stock Exchange. Here I have Pak Irwan Abdallah as the participant as well. He's one of the witness. So I remember like back 10 years ago, if we talk about Sharia, the media always ask that, can you change the topic? It's not interested at all, something like that. So I was like, oh, okay. But then, Mas Rizky, I found the answer that to develop the Indonesia capital market, the answer is through Sharia investment. That's the key. Yeah. I found it like this, Mas Rizky. When I did education to Indonesia people from Sabang to Merauke, there were always questions whether investing is Sharia compliance or not, whether it's gambling or not. Is it Sharia? Is it halal or not? So at the time, Mas Rizky, the number of investors in Indonesia, only 250,000 investors only. Compared to the number of the total population for 250 million, that is nothing, 0.0 something.
Huge gap.
Yeah. Then I found out that, oh, this is the key issue that we had to address at the time. So if the Indonesia Stock Exchange, the one who answered or tackled the question, that was not, wouldn't work that way, because we need somebody or a party who is eligible to answer that kind of uncertainty or question from people. That's why we asked the Fatwa from Ulama Council, Indonesia Ulama Council. And after the issuance of Fatwa number 80, then this really changed the landscape of investment in Indonesia. People start to believe that investing in capital market, as long as they comply or follow all the rules to be a Sharia investors, they can have a return from the investment, as well as they were sure that the investment in capital market was Sharia compliant. That's the fact, Mas Rizky. So the answer is to develop the Sharia capital market. That's the answer. And now, one of the speaker, Mr. Jalsi, said that Indonesia has everything to become the global Islamic hub. I think, inshallah, we are moving toward it, because if we see the development from 10 years ago till now, I think the growth and the improvement is amazing, like impressive. So I have a strong belief that we're moving toward it, and we see that the seriousness of the government, the regulator, to have bodies related to Sharia in finance, in other fields also, that so that the government and regulators very serious about developing the Sharia industry in Indonesia, in halal tourism and halal products and everything. So I have a strong belief on it. I remember back then when I went to a roadshow, we visited London as one of the prominent Sharia hub also in the world. They will also show interest in working together with Indonesia. So we have all the needs to be or the requirements to become the Indonesia the global Sharia hub in the world. So I have a strong belief on it.
So what my last question is: is the infrastructure ready then, Bu Kiki, for us to grow and to develop? What's your take on this?
Yeah, of course, if talking about that, not yet, I think. Yeah, but as I said, as your statement in the beginning, we have to rather to curse the dark. Yeah, we have to put some lights on it. Okay.
Indeed.
So yeah. So what we need actually is a synergy among the government, regulators, and business industry, academician, you know, and to work together to develop the Sharia market. And I think what is sometimes forgotten, Dr. Rizky, is how to create a demand on it. I see that the infrastructure in finance is already like ahead, like we have this kind of Sharia instrument and this and that. But sometimes, you know, to enlarge the market, we have to build the supply and demand, right? So not only to give the supply of Sharia products, but also to create a demand. So we need a literacy, inclusiveness, and we have to work together with people here to create the demand for Sharia products, Sharia finance, Sharia industry, Halal industry, and things like that. So, okay, let me tackle the question, the statement of Ibu Dwi. The answer is simple, Mas Rizky, because if the uncertainty time, people tend to look for safe haven instrument. I think the government bond, of course, is very secure, and it is favorite to investor at the current time, and especially the latest government bond called ORI 18. Also, the purpose of the usage of the money that is gathered from the Indonesia people will be used to help government in this pandemic time. So this is very noble. I think people are moved to be investor on it as well, because Dana Reksa is also one of the distribution partner for the government.
All right, thank you very much.
Okay, the last one.
Okay, the last one. Yeah, right.
I think next year, according to our research team, retail will rebound at best, yeah, followed by banks and then media, and we have this situation. Media, telco is the darling sector, so that's maybe if you want to invest. Okay, one more, Mas Rizky, give me 1 minute, yeah. I think for Sharia market industry to see this pandemic time, so we know that the situation will not be the same as before we had this COVID, right? So I tapped on what Dr. Jalisi said about SME. Yes, SME is also the key answer on it. But as we all know that in this pandemic time, SME is the sector that is hit harder. First hit, different than what we had in 2008 when SME was the cushion of the economy. So we have to equip them, especially for Sharia business SME, about having technology, because at this current time, without technology, business will not survive as they expected. So maybe that's on what my comment on your question, Dr. Rizky. I hope that answer. Thank you very much.
Thank you very much. Brilliant, Bu Kiki. Brilliant, Dr. Kiki. Friderika Widyasari Dewi. And yeah, now so we will have the we are now coming to the very last session of our discussion today, and may I applaud personally all the participants who are still here with the endurance to join the discussion. So may I seek for 1 minute of your last statement, probably, of each of the honorable key discussions today. And as for Dr. Bello, also regarding the credit risk as well, right? But it's all up to you. If you would like to answer this later, we will discuss about that further in through email or other channels probably. So may I have 1 minute of your last statement, final statement, only for today, to intrigue the upcoming discussions later after this webinar. start from Dr. Bello. The time is yours.
All right, thank you. Yes. I mean, I believe the question of the credit risk, I think, is something that can be addressed in a more detailed fashion if you want. So we are always ever ready, since if you want it to be answered in detail. But what I would like to mention is just that I think Indonesia has advanced. Indonesia has really advanced and achieved a lot. But I think how it is being promoted and be led aware by the global public, I think this is also another important area. And this can be achieved through international collaborations with other stakeholders, as you, Dr. Dadan has rightly mentioned, and many of the speakers also has mentioned. I believe the Indonesian government and the regulatory and supervisory authorities, that is BI and OJK, are doing tremendously in this regard, and they are actually collaborating. But I think at the national and international level, I think this kind of forum like ISEF is really, really a good platform for many to know what Indonesia is doing. I remember very well during the World Bank meetings in Bali, someone was saying that where can we learn the best model of Islamic microfinance? So I told him Indonesia, all right? So I think you have, Indonesia has achieved a lot, and then I think you need to realize that, yes, you have achieved a lot, and maybe a global benchmarking analysis of all your policies and initiatives, if undertaken, will give you the comfort that I believe you are already a hub. You are not aspiring to be a hub, but what you are aspiring is basically to sustain the hub and make it more to achieve excellence. I think that's the point that I would like to stress on. So global awareness and global collaboration with other stakeholders is a key. I think I don't need to repeat what all other members, distinguished speakers has mentioned. The Sukuk achievement of Indonesia, in terms of issuance of Sukuk by Dr. Is quite commendable, and I think we are very, very impressed with this achievement. And I think that is to show that it's not only about Islamic banking, but as well the Islamic capital market is far, far ahead of many other jurisdictions, because at the IFSB we have quite a number of jurisdictions that we work with, as I mentioned at the beginning, but I think Indonesia is among the top. And I think not only that, but the policies that you have in place are well laudable and commendable. Thank you very much.
Thank you very much, Dr. Bello. Global awareness, global collaborations as the key, and to be staying on top, among the top. Thank you very much once again, Dr. Bello, Lawal, dan Bata. Please, big applause for Dr. Bello. And also, may I now go to Mr. Salah Jalasi? your last statement, Mr. Jalasi. 1 minute,
well,
please.
I promise you it will be short.
Okay, thank you very much.
Let me come back just on the point of the industry. It's important to increase the focus on literacy and awareness. As you said, it stands at 9% currently in Indonesia. However, the industry as a whole should focus, should shed away from the principle of halal. Yes, our industry is halal, and that's maybe one of the strongest points of appeal. However, being halal doesn't mean that the industry should be, less efficient than the conventional industry. Okay? It is important that for the industry to focus on digitalization, fintech, innovation, that are aspects that should bring it, at par with the conventional industry. In addition, and halal will be a bonus if we want the Islamic financial industry to grow and to take its due share of globally. Here, the synergy between the different players is important. And I think, scattered duplications, redundancies are not, aspects that we should consider aspects that we should consider with care, and we should look more for synergies and complementarities between the different players, industry players, so that we bring it to the place we wish it should be in. One last thing, as the pandemic, as within the context of the pandemic, I think we have a lot in the industry, a lot of tools, you know, as I said, zakat, awqaf, sadaqa, and you know, these are not a luxury right now. These are very important, and it's important that they contribute in an efficient manner to promoting and enhancing the resilience of the society in these difficult times. Thank you very much.
Thank you very much. Good point, Mr. Jealousy. Thank you very much once again. Big applause for Mr. Jealousy, please. We can still see you, even though you're muted, but we can still see you on the video. Thank you very much once again, Mr. Jealousy. Now, may I go to Pak Deden Firman? One last statement, please. 1 minute, Pak Deden. Please, the time is yours.
Yeah, thank you. Thank
now
you.
The screen is yours. Thank you.
First of all, of course, I'm very, very optimistic that we have a bright future in Islamic finance industry. Dr. Bello and also Pak Salah is very, very optimistic. Of course, we have to more optimistic than Dr. Bello than Pak Salah. Current pandemic situation have give us a lot of things to learn more, and also maybe in current condition, growth is not the most priority in the business. That's why I think it gives us a time to think for the better future. We can think to consolidate our industry to become stronger and resilience, of course. And after that, hopefully, we can start with a better position to become a market leader in the financial industry. Again, I will mention what Pa Ahmad Bukhari said. Going forward, at least there are 4 aspects that will be the next frontier and drive the development of Islamic economic and finance. That's why Indonesia, of course, have to conduct this strategy. First, integration and collaboration within Islamic economy and finance ecosystem. I agree with Pak Salah that actually of course we have also considered not only the halal industry, but the halal industry ecosystem maybe can serve as a basis to further grow, because as we already know that actually the value of Islamic finance is very, very universal. It's not only good for the Muslim, but also, of course, for of the human being. The second very important strategy is the adoption of current technology or the digitalization. And the third is we have, as a Islamic finance industry, we have to think more about the sustainable finance, because as it's mentioned by Pak Bukhari before, that the concept of sustainable finance is very, if we can, very fit to the maqasid of Sharia itself. And lastly, of course, we have to strengthening the international collaboration. Indonesia cannot be the global hub without cooperation with other players, industry players, with other multinational bank like STB, also like standard international standard body like FSB. So the international cooperation, of course, very, very important. I think that my last statement, Pak Rizky. Thank you.
Thank you. Thank you, Pak Deden. Brilliant, good point, Pak Deden. Thank you very much. Once again, big applause for Pak Deden Firman. And last but not least, may I now go to Ibu Kiki, Dr. Friderica Widiasari. Please, time is yours. The screen is yours. Can
there you go.
The committee? Okay, there you go. Okay, there you go.
Because of the time, Dr. Rizky, I will make it short and precise. Just because I come from the capital market, so I always remind everyone that the existence of the capital market actually very noble to distribute the welfare among people here. And the answer to develop the Indonesia capital market more is actually tapping on the Sharia issue. So we have to enlarge the supply and demand. We have to have new issuers, Sharia issuers, with good quality Sharia issuers coming, new Sharia products, yeah. And also we have to enlarge the demand side. We have to educate people, yeah. I think that's answer how to develop Indonesia capital market to increase the welfare of the people. And the second one, Dr. Rizky, as we are having discussion here actually the connection about in Islamic industry with what is currently happening, which is the current pandemic. Actually, I hope that the Sharia market or Islamic industry can see this as an opportunity. How to tap the opportunity for what is happening now. What we can gain benefit from this kind of situation. What to adjust and address related to the pandemic, so that Sharia business, Sharia industry can grow even higher and give a welfare to people. And that's my dream about Indonesia Sharia market, Dr. Rizky. Thank you very much.
Thank you very much, Dr. Friderica Widiasari Dewi. Thank you very much. Big applause for Ibu Kiki. So now we have come to the very last session of our today's discussion. And in short, without further ado, yes, inshallah, we are ready to cope with this pandemics, and we are ready to stand up for the future, I believe. And yes, we may have some several risks as our hindrances in front of us, like credit risk, increased market risk, heightened operational challenges, and also some other obstacles that may be lying in front of us, but that should not be threatening us no longer, because as long as we have the global partnership, we have the global networking, global synergy, as long as we have the financial literacy and also inclusion and digital literacy as well, that will help to balance the supply and demand. And most importantly, creating the demand will also help patch and bolster the future of Islamic finance itself. And that will be the significant contribution from Indonesia and from the Islamic finance, Islamic industry, or halal ecosystem to the world in order to cope with the pandemics, COVID-19. And now we are standing upright, and we are ready to plant the tree and to grow the future together. We are in this together, and let's hope that we will have a better future, the better tomorrow together. So that's just for the last time from me. Thank you very much once again, the Honorable Dr. Bello Lawal Danbata, Mr. Salah Jalasi, Mr. Deden Firman Hendarsha and Dr. Frederica Widyasari Dewi, and also the honorable participants with your endurance to stay here with us to discuss. Apologize for any mishaps or any lacklusters. Rizky Wisnantoro here signing out, and I'm referring back to the MC, Ms. Oktaria Ardika. Thank you very much once again. Wabillahi taufiq wal hidayah. Wallahul muwafiq ila aqwamit thariq. Wassalamualaikum warahmatullahi wabarakatuh.
Waalaikumsalam warahmatullahi wabarakatuh. Okay, thank you so much, Mr. Rizky, for guiding the discussion very well. And it's so wonderful today. And thank you so much for our speaker, Dr. Bello Lawal dan Bata. Thank you so much, sir. And also Mr. Salah Jalasi. Thank you so much, sir. And also Mr. Deden Firman. Thank you so much. And also our beautiful speakers today, Mrs. Dr. Frederica Widyasari. Thank you so much. And I will be your fans. And that's very good material from our excellent speaker. I would like to say thanks to Islamic Economic Society, or LES, together with Bank Indonesia, National Committee on Islamic Economic and Finance, KNEKS, Indonesian Association of Islamic Economists, IAEI, and also Indonesian International Islamic University, UIII. And let us all be guided by all the things we have learned and heard throughout the webinar and be able to see and influence our future. Till we meet again, perhaps in the next international webinar, may all of you always in the protection of Allah Subhanahu wa Ta'ala. Thank you so much, and wassalamualaikum warahmatullahi wabarakatuh. Bye-bye.
Everyone.
Thank you very much.